All right, welcome back. It's that time of the month again where we talk about the most, one of the most controversial stocks that is in the game, and we are talking about Prospect Capital, right? So it's time for the update that I told you all that I would give you several days ago now, okay? This company is a BDC, okay? And some of you want to know what I'm doing with this particular stock and if I've sold it yet, and if I haven't sold it, then what is it looking like in my portfolio. Before we get to it, let me again reassure you that this stock is not to be trifled with if you are a beginner investor. Okay, for those of you that do not know, Prospect Capital is a stock that is kind of popular among a particular group of people within the investing community. And I say particular for a reason, okay? Largely in part because at a price point of just $2.67 currently at the time of this recording, it is on record as one of the cheapest monthly paying dividend stocks that you can buy dollar for dollar. Okay. Make no mistake about it. That is in large part of why Prospect Capital is so popular. And seeing as how the majority of Americans are experiencing some kind of financial turbulence in their lives, paying $2.70 for a dividend stock that pays you every single month doesn't really sound like a bad idea on the surface. But before you go and blow your entire income and cash flow for December on this particular stock, if you are unfamiliar with it, okay, then I need to warn you and admonish you to pump the brakes on this one, okay? Pump the brakes on this stock because this stock is not for the faint of heart. It is not for the faint of heart. And please understand that with the NAV erosion, some of you may not even know what that is, but the NAV erosion with this one is real. We'll talk about a little bit about that in another video, okay? But from a seasoned investor standpoint, there is absolutely nothing about this stock that will give me the courage to throw a ton of money into it as a long-term, or hell, at this point, even a short-term play, okay? And I know that isn't going to make a lot of you who believe in Prospect Capital very happy, but I'm about complete transparency here. Okay, whether it's a popular opinion or not, I have to be honest with the people. I got to be real with y'all. I got to tell y'all that this is a bad investment. Okay, whether it gets me likes or upvotes or not, don't matter. I have to be real with the people. I got to give y'all what it really is. I have to be honest. Okay? And I'm telling you right now that for the everyday average investor, you should stay far away from Prospect Capital. It has a history of failure at both the company level and the stock value level. And hell, the dividend level. Okay? We're talking about losing over 80% of its overall value since its conception. If we go to overview, right? My God, Prospect Capital is the very meaning and definition of the term dividend trap. I can't even say that at this lowly price point of under $3, that not even being as cheap as it is right now, I can't say that it's a good investment to take a risk on. I can't say that. I can't definitively say that. Please understand that if you are taking a risk on investing into this company, that you are doing so knowing that not only could the price value of the stock continue to decline, but that they could likely, potentially experience more dividend cuts in the future, to which they've already had three different cuts, okay, over the course of their dividend payout history. That in itself is usually enough to get a hell no from investors and the certainty and certainly dividend investors, because the certainty of that dividend being there going forward is non-existent. So let's quickly take a look at this. We're going to take a look at the charts as well as my own portfolio so that you can see how bad this has been for me. And then we'll talk about why I haven't sold it yet. Okay. So I've got it pulled up here. Prospect Capital. Again, you see over the last 5 years is down 50%. But if we go out and we go all time, the max, you see it's down over 80%. I wasn't lying. Men lie, women lie, numbers don't, right? Down 80% all time. Now, some investors may look at this price point that it is at today at $2.67 and say to themselves, you know what though? At $2.67, that is a price point that they are willing to take a risk on. I mean, honestly, if we're just looking objectively looking at this, I've spent $2.67 on worse things. Honestly, I have spent $2.67 on worse things, okay? On things that did not give me any return. Things that did not give me a dividend that pay me a monthly dividend at all. All right. But if we go over to the dividend charts, you'll see what I'm talking about. We've had that price cut. They've had that price cut 3 different times. It started out at they started out paying 11 cents per share. Then they cut that down to 8 cents per share. And then it was cut again down to 6 cents per share. And then it was cut down this last time to 0.045 cents per share. You can see the chart right here. Again, 3 different dividend cuts, and there's nothing about this stock that says they won't do it again, that it won't experience further cuts. I know what the company is saying. The company themselves are saying, listen, we've cut dividends so much to where we're at a point now to where we are shelf stable. What does that mean? It means that they believe that they can continue to pay out these monthly dividends for the foreseeable future, because they believe that they're paying it out at a price that is that they can maintain the stability of the company and the stability of the share price, because this stock right now is currently so much undersold, right? Because it has been decreased. It has lost so much of its value because of what's been going on with the company, that now it is trading very much under its value. What people say that it's worth, or what its current value is in the stock market. And the analysts, if you go to the forecast, they only have one analyst, and they're telling you, yeah, go ahead and sell this. And no doubt they're telling you that because of the past performance of the stock, which I can't blame them for. I can't blame them for that. But right now, we're going to go into my portfolio, my dividend only portfolio, and I'm going to show you what this stock has done, how it has performed, how much money I've lost, and what it's earning me monthly. Okay, so let's get into it. Again, this stock is paying out 0.045 cents per share as of the time of this recording. So let's get into it right quick. Let me turn on my recorder. All right. Screen recorder is on. We're going to open up my dividend tracker, which is tracking my dividend only portfolio. You can see that I am earning $95.23. I had really hoped to get to $100 a share. I mean, $100 a month before the year's end. I still have a little time to do that. I think I can achieve it. I think I can get to $100, a $100 average before the year is out. Okay, that's my goal though for this year, is to get to $100. It's to average $100 a month in dividends before the year 2025 is done. That's where I want to be. And next year, this time next year, I want to be at $250 a month. I want to be averaging $250 a month this time next year. And I think it's absolutely doable, but that's not why we're here. We're going to go into the portfolio. We're going to go to Prospect Capital. Now you can see right here where it says that I am down $163. Okay. Total return. If you click the information button, let's read it together. Total return percentage is calculated by dividing total return by invested cost. Invested cost represents the maximum amount of money invested in the position, excluding dividend reinvestments and share repurchases. So this price return and the total return are not a reflection of what the investment of Prospect Capital has brought me dividend wise. It hasn't included the dividends that I've earned. And if you drop down here, this is the beautiful thing about this little app, this little free app, is that it gives you all of this information. So if you drop down here a little bit further, it says right here, all-time dividends received $65.35. Okay. Estimated total annual dividends, which is annual, which is yearly. Right now it's earning me about $44.45 every single year. Okay. Now that number is going to change because, again, I am not taking any of these dividends out and doing anything else with it. I'm allowing them to rebuy more shares every single month. So you'll see that $65. If we deduct that from the price return, well, then that number drops substantially, right? And it's moreover like the total return, which is around $98, which is negative $98. Now that's not so bad. I've lost $100 on worse things, right? I've lost $100 on worse things. Now I'm not telling you all to go out and do this. I'm just giving you a clear insight, big picture on what it costs to invest in a bad stock. Okay. And it tells you right here, this might carry high risk. You'll see it right there on the screen as I scroll. And so right now, you'll see the estimated payment if you drop all the way down. So right now I'm getting about $3.30 a month. Now, if I stopped investing in Prospect Capital right now, that $3.30 a month is what I would get from here on out. But I'm not going to do that. I'm going to allow these shares to continue to roll over and into themselves to buy me more shares for free. And we're just going to see how big we can grow this thing without throwing too much money in it. Listen, even if my total return was negative $163, ladies and gentlemen, I've lost more money on worse things. Okay, I've spent $163 on bad things, I'm pretty sure, over the course of my big adult life. I've spent more on less. Okay. Now, that is not me telling you all to be ignorant of your investment or to just shrug off how bad this company has performed over the since its conception. That's not me telling you to ignore that. I'm just telling you from my point of view, because I'm an investor that has a 9-to-5, quote unquote. I have a 9-to-5 and I go to work every single day just like you all do. I'm not some huge YouTuber that makes thousands of dollars every single month, right? I am just the normal, average, everyday American trying to figure it out. So I started a dividend portfolio, and I think that Prospect Capital has been one of the contributing factors to that dividend portfolio. Out of the $95 that you see, let me go back to the dashboard. Out of the $95 a month you see, Prospect Capital, you see right now, is the reason that I'm getting about $3.30 a month every single month. Now, that's not a ton of money. And certainly a lot of people have said that, you know what? A lot of people have said that, you know what? With the share price being this low, I think it's worth the risk, because what's $3? You can't even go. Listen, in today's economy, you can't even go and get a cheeseburger for $3. There's not much that you can buy with $3. Hell, you go to the dollar store and it's $1.50 store now, right? So you get 2 items from the Dollar Tree and you spent $3. You spent more than the cost of a share of Prospect Capital. I'm just giving you some insight on how I look at this, okay? Because yes, while the company is terrible, has performed badly, and yes, while the company does not look, I don't see any future earnings reports that are telling me that this stock is going to shoot back up to where it once was, right? I do think that there, in some world, for some dividend investors, there's a small play to make here. There's a small play to make here. Because a lot of them are thinking, all right, how much lower can this thing really go? A lot of people only see this as upside potential from here out. So you have to make the choice yourself, y'all. That's what this all comes down to. You got to decide yourself. You have to decide whether or not this stock and this company is worth throwing a couple dollars in. If you decide no, it's your decision. Nobody's gonna kill you for you deciding not to invest in a bad company. Right? But again, some people find that there's some value here to be had. Before we get out of here, I want to go over one of the comments on the channel. All right, this last thing I want to highlight here is a comment that I got from at Rob the Father. Okay, at Rob the Father says, "Hey, new sub here. I have 1,000 shares of PSEC at an average of $3.65. I have drip turned on and get 18 plus shares a month. I love this stock under $2.75 and will be buying more to get my average down." First of all, let me thank you at Rob the Father. I appreciate you for the subscription, my guy. Love the fact that you commented as well, because that helps the channel. And let me say that for somebody like the Rob Father, he's looking at this as a way to bring in steady cash flow on a monthly basis. And he's looking at this low price of $2.67 as a way to dollar cost average down in the average cost of this stock that he's paying out over the course of the long term by buying more shares at a lower price, right? So if his average cost right now is only $3.65, which isn't bad. Okay, mine, I believe, is at least $4 and probably about 50 cents or 60 cents, something like that. So my average is at least almost double what it is right now. So if he can average down his cost and get to a point to where this stock is buying more shares at a constant rate, and all of a sudden he gets on the other side of the fence of this, on the other side of the wall, to where this negative is now a positive, to where his cost is so low that when this stock does, and if it does climb back into the $3 range, the $4 range, the $5 range, he'll be looking at all positive income, right? He'll be looking at all positive capital that he has earned on this stock, in addition to earning that sweet passive income with that monthly dividend that he's getting. So again, there's multiple ways to play the game. There's multiple ways to skin a cat. A lot of people will look at this. They'll look at the NAV erosion of this particular stock. They'll look at the past performance of this stock and where it's at and what it's done. And they'll be like, hell no, this is a dividend trap for sure. I'm staying far away from this. And I can't blame them for that. That's a smart move. That's what smart investors do. However, there is a particular sect of people that look at this and say, you know what? Yeah, it has performed terribly. Yes, the price has fallen off of a steep cliff since its conception. Yes, this stock does look dismal going forward, but I see an opportunity here to get a little bit of value, or at least some moderate value, at a very, very, very low cost. I see an opportunity here to purchase a stock for under $3 that's going to pay me every single month just to hold. A lot of people see this as a positive. You got to decide what's best for you. You have to decide what's best for your portfolio. You have to decide if this stock is worth the risk. That's all this comes down to, y'all. I've shown you what I'm doing with it. I've shown you my returns. I show my portfolio. I have no problem with showing what my portfolio is doing. If I'm going to be on YouTube doing videos, if I'm going to be on YouTube talking about finance, I have to be willing to show it. I got to show and prove. I got to show what my portfolio is looking like. And I have no problem doing that at all. But again, let me know what you all are doing with this stock. For those of you that own it, let me know if you sold it. Drop a comment and let me know what your future outlook on this stock is. Let me know if you see some possible upside potential. Stock ain't for everybody. It's definitely certainly not for the weak. But let me know. Drop a comment down below on the channel, and I will see you all in the next video. We're going to be talking about a couple things going forward. Again, I told you all I want to venture into covering topics at a broad scale. So we're not going to be talking about stocks on this channel. We're going to be talking about job losses. We're going to be talking about the job industry. We're going to be talking about finance as a whole, because there's so much more that goes into finance and personal finance than just stock buying. Right. I think we all know and understand that. The more understanding that we have the way the economy works, and more importantly, how money works, the better off we are, and the more hedge and advantage you have over your own finances. Right. So drop a comment down below. I appreciate each and every one of you if you made it this far, and I'll see you on the next one. Later, y'all.